Alright, okay, good evening everyone. Welcome to today's session. Good. So very quickly, just a quick disclaimer. Everything that we'll be covering in today's session is solely based on my personal point of view, and they do not directly translate to any sort of a financial advice, okay? So with that said, if you have any questions, do feel free to also put it into the chat. I'll be monitoring the chat regularly. Right. And what we'll be doing today here is we'll walk through the markets and highlight some of the opportunities that we can trade. Okay. I'm personally looking at the potential intraday setup here on the S&P 500. As of now, this is a little bit cleaner. But this one here will need to wait until the New York session, which is opening at 8 p.m. And then we need to wait for the candle to close, so it's about like 8:15, 8:30. We might get an entry to get involved in the S&P on the upside. Okay, so we jump into that maybe around 8:15 later on. But for now, building into 8:15, we'll actually look at the markets first, right? And we're gonna talk a little bit about the overview. Okay. So, yep, if you have any questions, as I mentioned, just put it into the chat. We'll be able to look at the chat and answer your questions accordingly. Okay? Cool. So over here, we'll wait a little bit while until 8 p.m. I think most of the traders will probably join in at 8. Okay, so just want to come in and come welcome you. And then we'll, resume it at 8 p.m. Okay, so grab a coffee, okay, if you need to, and I'll jump back in about 8 minutes. Yeah. Oh shit, I'm mute. Yeah, okay, so maybe I'll backtrack a little bit. I think I was muted just now, but now it should be fine. Okay, yeah, so I was kind of explaining the table format, right? What it is. Okay, so very quickly, I kind of talk about it again. So primary sequence, you can see this is bearish. How is this being kind of like analyzed? Is really looking at the 4-hour time frame, and then this kind of understand what's the market trend right now, right? So if you look at the dollar index right now on the 4-hour time frame, it's in the bearish market trend, right? So the primary sequence here is bearish, which means that overall we're expecting continuation to downside. However, that doesn't necessarily mean that we don't get short-term buy opportunities, right? Because the market can pull back, the market can actually retrace itself. Okay, so we might also get a short-term buy opportunity trading in the near term as part of a retracement. Okay, then you also see the expectation over here. So expectation is basically what I'm expecting the market to do, right? So in this case here, you can see price to move towards 100.25, which means I'm kind of expecting price to pull back. Okay, I'm expecting price to complete a 1, 2, 3 bare minimum, kind of retest this high, right? Potentially price can go deeper as well. Okay, but right now, that's what I mean by expectation, right? So with that expectation, that's where we have a trade plan for the week, which is to look for short-term buy, right? To kind of trade this move to the upside to complete the 1, 2, 3 wave structure. Okay, so this is a little bit on the Elliott wave perspective. After wave 4 has been completed, we'll then potentially look for a continuation to the downside for wave 5, right? So you can see this gives the clarity, right? We understand that the overarching direction is bearish, but we are expecting some short-term pullback, and that opens up a trade plan where we can look to buy. Right? So this entire cycle, this entire phase here we're doing is essentially analyzing and giving ourselves the direction that we want to be looking out for, and then of course the context that the market is currently in, right? So for dollar index, the context is short-term pullback. The trade plan for the week is to look for the buy trade on the pullback, okay? And the overarching direction here is we're looking to sell it, okay? So that's on the dollar index, okay? Hopefully that's clear. Now we might not trade the dollar index directly. That's where you might focus on the euro dollar as well, because they are basically the inverse and the opposite of things, right? So over here, if you look at the euro dollar, right, on the 4-hour time frame, you can reference to the table on the bottom, right? Primary sequence is bullish because the overarching trend, right? If you can zoom out, you can see that overarching trend is bullish, right? But the expectation for the week here is for price to actually pull back towards this key level at 1.1260, right? Potentially this can go lower, right? Where you can see this as maybe an inverse head and shoulder pattern. This can actually go lower, retest this, right, and complete the head and shoulder pattern before the move back up. It can be a valid pattern still, right? But whatever it is, the current trade plan is really to look for a short-term sell, right? So if today we can get some sort of a continuation of a pullback towards like the Fibonacci 50 and 618 retracement, we can look for a sell trade. Okay, and then of course our take profit level for the first target will be at a 1.1260. Okay. So this one again on the hard time frame, around the H4 time frame, what is giving us is the overarching direction. Okay. How do we get involved in the trade? How do we get a setup or a potential entry signal? It's where I jump into the lower time frame over here. Okay, and I'll talk a little bit about some of the principles that we use. I would use a multi-time frame approach. Okay, so H4 is to look at the overarching direction, the bias, the context of things, and then on the hourly is where I look into the setup, right, the conditions to get involved in the trade. So over here on the hourly on euro dollar, the first thing we can see is we have a little bit of a topish formation, right? We have this neckline here where the market actually break and close below, right, very clearly. And then as this breaks and close below, we did actually leave behind a small little fair value gap, right? So SMC model. And of course, we also have this as a potential supply zone, right? So there's a little bit of an overlap there. And then, of course, the market right now is doing a pullback. Okay, so what I like to do is I'll use a lot of Fibonacci ratios to help me get a more precise entry, stop loss, and take profit, right? And to help me manage my risk to reward ratio. So when I see this, right, it's where we have a valid setup because we have some sort of a liquidity, over here, aka some sort of a fake break, double top, double bottom kind of structure. We have market breaking this structure here as well, right? And then we have like fair gap, and the momentum to the downside is quite obvious. So what I'll do then is I'll take the Fib from swing high to swing low. Okay, and basically the entry area is somewhere around 67, which in this case here coincides very, very nicely with the order block. Okay, now in this case here, if the hourly chart can give us some sort of a pullback, right, towards the area around the 67 Fib, that would present a decent sell trade setup. Okay, so typically if you're going to use the Fibs, if your entry is at the 67, your stop is just above the 100, your target is just below that 0. Oftentimes the risk reward ratio is just going to average out about 1:2. Okay, so that gives you a very, very healthy risk to reward ratio, because if your hit rate is just about 55 to 60%, with a risk reward ratio on average 1:2, that's pretty decent. Okay, so this is on the euro dollar. This is definitely an opportunity that you can keep an eye on. Personally, I use the pending sell limit order. So basically you set your limit order here. If price actually retrace and tag the area, you automatically get in on the sell position, right? And then if you can set your stop, you can set your target, put in your risk management, go and calculate your lot size and position size accordingly. Okay, so this is on the euro. Okay, potentially we can look at a short-term sell. Now let me also then jump in and interject this with a short-term opportunity. Okay, so this one here is on a 15-minute time frame. Okay, this is more of an intraday short-term trade. The strategy is pretty straightforward. We're using some indicators, the EMAs, to help us in identifying the direction that we want to focus on. So in this case here on the top right, you can see the M15 is bullish. Basically means that the MAs are on top one of another very, very cleanly, and we are focusing on the buy setup, right? We are focusing on the upside. Okay, and this strategy here, we're primarily only trading during the key time zone, right? So in this case here, we're looking at the US market, the New York market. So that's going to be like 8 to 10 p.m., right? That's the window of opportunity that we can look to trade and execute. So what are some of the criteria we need? Number one, of course, is clear direction, right? So in this case here, we have the MAs clearly one above another. That gives us a bullish bias, so we're looking to buy. Then what we want to see if you want to buy is when we see previous session low gets taken out, right? So in this case, you can see Asia low very nicely got taken out, before the New York market kicks in after the London market close. So this is the part where we call it liquidity sweep, right? From SMC model, it's like trapping traders, right? And not only we have this Asia session low, we have this low here getting fake out. Okay, now once we get that liquidity sweep, obviously we want some sign of a reversal confirmation, right? So we want to see a bullish candle form in the New York session, right? So that would then tell us, all right, the market is entering into a key session in the New York, and there is sign that the market is going up, right? Because we need that confirmation that the market wants to go up after a liquidity sweep. Okay, and since we're on a 15-minute time frame, every candle will close, every 15 minutes. Okay, and we want to wait for the candle to close before we execute any trade. Okay, so the strategy over here is direction, looking at MAs, right? We want to have clear direction. Like if you take a look at gold, right? All the MAs are kind of like constricting. This is something that is not clean, right? So you don't want to be focusing on gold for today's trading session. But if you take a look at S&P, it's very clear, right? So the first thing is direction. The second thing is to identify the session's highs and lows, right? Those are your key areas. In this case here, we can see the lows has been taken out nicely, right? It doesn't really just, break and close below. We have some kind of weak, right? So it's kind of liquidity sweep. Then we need to wait for confirmation during the optimum trading time session, right? Which is New York 8 to 10 in Malaysia time, right? So we need to just simply wait for the candle to close, and once the candle close bullish, okay, we can see some sign of a bullishness. What is our entry is we're gonna set a buy pending order above that candle, and then our stop can be just below that swing low, and then our risk reward ratio we just simply target 1:2. Okay. Again, depending on how wide your stop is, right? So in this case here, this seems to be a pretty okay stop. Sometimes if you have put your stop a little bit too tight, it may not be ideal. Okay, but if your stop is too wide, you can at least use like maybe halfway point of that. Okay, but right now we haven't get a confirmation, right? We haven't get a bullish candle close. Okay, so you want to be patient and wait for the 15-minute candle to close before executing or putting in any pending orders. Okay, so this one here, right now we're 8:10, so it's another 5 minutes for this candle close. If this candle is not gonna close bullish, it's gonna close like more of an indecisive candle. Then you wait for another 15 minutes, right? You wait until like 8:30, candle close, then only you have that confirmation, then only you jump it. Okay. So this one here, you can use it for, common FX pairs, major pairs like euro dollar, dollar yen, pound yen, can do that. You can look at indices like maybe the Nasdaq or the S&P. You can choose either one, right? Because both the Nasdaq and the S&P is generally very, very correlated. And then you can also consider gold, right? Now you might not get trade setups every other day, right? Like gold here, I don't think this is a solid day to be looking at gold. All the MAs are coming together. This is very nice because you can see the MAs are fan out. Alright, if today you want to consider, looking at some of the major FX, yeah, you have like euro dollar, but of course euro dollar here has a very clear bias, right? It's bullish, but we want to again see that confirmation candle in, right? Again, this one you can see that we're bullish. We are breaking and testing that Asia low, but we need to see that bullish candle formation, then only we have the execution. All right. You can also look into the dollar yen if you want to, okay, and see if there's anything. I think there is the setup here as well, right? You can see that we are bearish, right, in terms of MA. And then what we have is that the Asia and the London market highs has been taken out, right? So that's potentially liquidity sweep. What we want to see is a reversal candle. Okay, right now it seems like the market is pushing down, but we want to see and wait for the candle to close. Ideally, we want this candle to come down and ideally take out this bullish candle, right? Then what we have is a bearish engulfing. Then that will give us a little bit more confidence to kind of really consider that sell stop. Okay, and then the stop maybe it's about 18 to 19 pips, right? If you want to add a bit of spread, that can push it to about 20 pips stop. Then your risk reward, you can just go for 1:2. Okay, so that's on the dollar yen. Euro dollar, not really giving us that sign yet. Okay, S&P not really giving us that sign yet, right? At least for the 8:15 candle, right? I think dollar yen here, the 8:15 candle is a little bit more obvious. Okay, so for those of you who are keen, potentially this can be a valid setup. So let's say this is gonna be a 20 pip stop, right? I'm just gonna be calculating a little bit in terms of position sizes. Okay. Right. Okay, if we're gonna look at this here, potentially we can look at 5.8, right? And then if this is gonna be a 20 pips stop, 40 pips target 1:2, it looks something like that. Right, so another minute, there's a good chance that this candle would, be a potential reversal. Again, we are not entering immediately when the candle closes, right? We're using that candle confirmation to kind of set up a sell stop pending order. Okay, meaning we need to still see price kind of break below, then only we act as a form of confirmation. Okay, so this one here, if you're looking at this, right, this is how I'm going to set it up. Okay, 142.58, and then your stop loss here is 142.78, right? So 20 pip stop. We're looking at 1:2, so that's potentially a 40 pip target. Okay, so great. The candle just closed, right? So to me, this is considered a bearish candle reversal. Okay, so I've placed the sell stop order, right? Now, why is this a bearish candle reversal? Because you can see what we have is a bullish candle, and then the next candle here closed more than 50% of the previous big white candle. Okay, so to me, that's considered a bearish reversal. Okay, and then I put another layer of confirmation where price needs to take out this low. Because if price don't take out that low and just continue to go higher, then I'm not going to enter on that trade, right? So that's how the intraday setup is being done. Okay, so this one here, you can see, this candle is indecisive, so there's nothing there. S&P here also indecisive, right? So there's really nothing there. Now, obviously, you can do a little bit of, potential jump ahead of the market, where you can say, all right, what I can do is, I don't need to take this high, I can take this high, and then, you can put your stop just below. This seems a little bit tight, but for me, I think, I would really prefer to see some sort of a bullish candle before really deciding to put in a pending, right? So right now I do have this dollar yen, right? We'll see how things go for dollar yen. Okay, place that order there ready. I'll jump back, to the swing side of things. So a little bit of a, back and forth. But hopefully you can see how the intraday works. Okay. Good. Now another swing trade that I currently am involved in, and I think it's worth to be talking about, is the silver XAG. Okay. So again, if you take a look at silver here, right, what we have is the primary sequence is bullish. Right. Why? Because you can see overall, the market is basically moving higher. But the expectation here, what I have is we are expecting at least some sort of a pullback towards 30.8, right? So we can see this as an impulse leg, then this is potentially pulling back. Now, it may not come back towards 30.8, it may just kind of retest this area here and then maybe start going higher. But the expectation is basically to look for the pullback. Okay, and therefore the trade plan for the week is to look for short-term sell. All right, now if you go over to the hourly time frame, we have the setup actually here as well. Okay, we have this low topish formation, right? Liquidity sweep. We have the swing low break of structure. This break of structure over here carries the fair value gap here as well. Okay, obviously the market has broken through that. But I don't trade off the fair value gap. I trade off the FIB. Okay, there are some other blocks here, of course, lying as well. So I'm just basically trading off the 67 Fibonacci retracement. Okay, and same thing here. You can see stops above that high, targets below here, right? So this target is the 2.6. It's giving us about 1:2 risk to reward ratio. But of course, you understand that on a hard time frame, price can even come back down and potentially retest this low, which is going to put you around 32. Okay, so that is where you can't even consider, like, all right, if I'm gonna have a second target, right, can I go for extended, all the way to 32? That will open up your risk reward to 3.7. right? So what this means is you can actually have um, multiple targets, right? You can have take profit 1, take profit 2, take profit 3. You can manage your trade accordingly. Okay. So this is on the silver trade. We're kind of expecting that to pull back. Of course, gold here kind of similar as well. We're kind of expecting the pullback. Where we're looking at 1, 2, 3, right? Okay, so gold sequence is bullish. You can see that overall trend is definitely bullish, but the expectation is a pullback, right? And then we're using some FIBs to guide us. So we're expecting price to come back towards 3220. Okay, and the trade plan over here is to simply look for short-term sell. Okay. So of course I don't have a hourly setup here on gold. I'm involved in silver, so I don't want to be getting involved in gold. Wouldn't want to be overly exposed on quite similar positions on precious metal, right? Okay. So that's on that. Okay. Another position to be considering is actually the dollar yen. Okay. So dollar yen sequence is bearish, right? Again, market is still in the bearish market trend. But the expectation is for price to pull back, okay, towards the 141.90. Okay. Now, there's this slight principle that I often follow. It's price tends to develop in sets of 3. So we have 1, 2, 3. Okay, and of course internally here we're expecting 1, 2, 3 as well, right? So there are two sides of the trade that we can look into. One of it is to trade this move, okay, where we expect price to come back towards this key area. The other potential setup trade plan is to wait for price to come back down here and then look to trade it up, where you're taking the third wave of this entire leg. Okay, so as of now, there is the opportunity here where if price actually pull back sufficiently, we might get a short-term sell first. Okay, so this is the part where this is pulling back. If we can come back to this area, we'll look to sell. Then here we'll look to buy, right? So we can capitalize on this and then capitalize on this. Okay. So with that said, this one here you can see, again, very similar setup, right? We have the sweep of liquidity. We have this structure being broken, right? We also have this structure being broken. So if the market actually pulls back, again, back towards fit area, that's where we can look out for opportunity. Okay. So that is going to be around 143.30, and then the stop is above that swing high at 144.05, and then primary target here is going to be 141.95, right? Now obviously you can go for the 618, which gives you another 50 pips, right? Because the 141.95 is essentially very close to 50% fit, right? So again, you can have like multiple targets if you want to. Okay. So this is, you can see the tag one on the rates, right? Those are essentially the ones I'm personally having some sort of a trade plan, as well as setup. Okay. Now things like this, for example, if you take a look at Aussie yen, okay, we have clear directional bias because the overall market trend is bullish. We have the expectation here, of course, we're expecting price to pull back, right? Because after this huge move to the upside, we're kind of expecting a pullback before the continuation. Okay. However, we don't get any clear structure that can we really work with, right? So that's where the trade plan here is being patient, right? Which means that, okay, probably you don't want to pay too much attention on this. You don't want to be like focusing on this too much. You want to focus on something else, because things are not the clearest as of now. Okay. So Aussie dollar is an example where you probably don't want to touch it. Okay. Then we have the dollar Canadian. Dollar Canadian over here, I'm expecting, again, the crawl to complete. Okay. This one here, we're looking at the expectation where this would develop into a diagonal, and then after which potentially upside. Okay. So the idea of this, right, is while the sequence is bearish, while the market trend is bearish, the trade plan is to look for potential reversal, which means there's a good chance that price may actually reverse the bearish market, right? But maybe this will need to complete first, then that push up, and then it start to take it off. Okay, so dollar CAD, that's my take as of now, right? Talk about gold, S&P. Okay, S&P over here, short term, potentially the pullback first. So again, you can see the sequence is what? The sequence is neutral. I mean, the market has been, going down and then coming up. But potentially we might be reversing into a bullish direction. Okay, but the expectation is we want to see price to pull back first, then we can look for the buy trade. Okay, so this would need a little bit of time as well, right? So in terms of swing trade, you want to be patient on that. The yen pairs, in terms of like pound yen, we get a nice little clean break of structure. So we are waiting for the pullback. Short term, we may potentially look at the sell setup, but we want to see an impulse leg first, right? So right now there's nothing much, but we expect the pullback towards 188.8. Okay, odd yen more or less the same. We're expecting that pullback, but just be patient for now. Pound Aussie, we're expecting the pullback to the upside. There isn't much of a buy setup, right? So this one here, I would suggest you can wait for the pullback to complete first, then around the zone to look for a sell instead, right? So wait for market to come into the key area and then look for the sell. Okay. Yeah, so that's on the pound or. Okay, and then we have Bitcoin. Bitcoin here, we're definitely bullish sequence, right? I think the overarching trend is definitely there. But if you take a look at the recent development, this is pretty crawlish in nature, so there's a good chance the market will pull back, maybe towards like there is structure here, then look for the buy. So you can see, right, the sequence is bullish. Yes, we're in uptrend, but the expectation here is price would probably develop a crawl, and then we'll expect some sort of pullback. So therefore, the trade plan is just to be patient. Okay. So in terms of swing trade, you may not get something in every other pair all the time, right? But just based on my personal experience in typical week to week, you often get about like 3 to 4 that you can really take a look at, and then maybe 1 or 2 trades would really be the one that you execute. Okay, yeah, so that would generally be how it looks like on a week to week basis. Okay? Now let's just very quickly keep track back to the intraday, right? So dollar yen is coming down. If it breaks that low, that would be great, right? Anyway, this is gonna be another bearish confirmation candle. We can consider that. This is the one that I'm talking about, right? It's kind of giving you that bullish momentum candle right now after sweeping the liquidity. If this is something that we're gonna be interested in, yeah, it's probably gonna be a 20 pip stop, right? Okay, if let's say the entry is 139, and then we have a 20 pip stop, our 40 pip target 1:2. That's how it's gonna look like. So if we gonna plan that out, yes, 20 pip stop, position size, right? Good. Okay, yeah, so this one here, if we are interested in, let's do that. Okay, we can consider to be looking at this as well. Okay, I think we are about 2 minutes into the candle close, so we can potentially set this up first. As long as the candle close is carrying a bullish candle body, I think that would be perfect, right? Okay, yeah, that will be. So the stop is 3.7 and then 1.143. Right, so yep, that will be something to consider as well. Yeah, this is definitely not something great. It's like constricting. So I think gold this session will probably not get anything, right? S&P, we haven't really get that bullish confirmation, right? So there's really nothing there. Okay, so I think this two would be great. Okay, bear in mind because they are both dollar related. Again, you might be looking at it from the perspective of risk exposure. Okay, because one of this you're actually buying, which is basically selling the dollar, and then the dollar yen here you're also selling it. Um, so that would be like two times. You're selling the dollar two times, right, in two different positions. So you might want to factor that as your risk exposure. Maybe if you're taking both, you are okay, you're aware of it, then fine. If not, then you might want to consider like reducing half of your lot size or whatever, right? Okay. Yeah. So another minute, I think that would be a nice little confirmation here. This is pretty good as well. Yeah. So we have the bullish close. So definitely that's a confirmation, right? So again, that buy stop is above. If you can break above, then that would be a potential valid trade. Okay. I'll talk a little bit about potential management on this trade here as well. Okay. The idea is if we get involved in the trade, we want to obviously see momentum carry through. And if you can get about 1:1 risk to reward ratio, it's often good to kind of consider shifting stops to break even, and then remove that risk on the particular trade and see if this can eventually hit our target, right? So that's just very small little aspect of risk trade management, right? If it goes in our favor. Okay, good. So I think dollar yen, I'm just tagged in, right? So we're in on dollar yen. We'll see how this rolls. So this one here, right? This trades the window that we want to execute the trade is gonna be between 8 to 10 p.m. That's the New York session. And oftentimes the trade is gonna resolve less than 24 hours. Okay, most of the time, right? Sometimes it can drag a little bit longer. But if let's say for example, you set in a pending order and then by 10 p.m. there's nothing there, you may want to cancel that pending order. Okay, because the trade essentially is you want to execute it, you want the momentum to be there during the key time period, right? Which is New York session itself. Okay. Um. Yeah. Good. Yeah. So let's just see how this would play out, right? Any questions that you guys have? All good. Okay, any questions that you guys have? No questions? All clear? Okay, so I think a couple of things that we have the opportunity to talk about today, right? Okay, some intraday setups that we have the chance to talk about. Some swing trade potential ideas here as well, right? Silver kind of pulling back. Again, it's kind of around the entry area. Yeah, let's just do a quick scan through. Silver here just it's not silver. Aussie dollar here just managed to give a liquidity sweep, right? Um, yeah, we did manage to break this low, okay, this inner low. But I think on a higher time frame, ideally we want to see some sort of a more momentum move before we really consider that short-term sell, right? But I think overall this may start to develop into an opportunity here, right? So this can be seen as some sort of a diagonal structure, right? And we're expecting the pullback maybe towards this zone. But I would love to see a little bit more confirmation on Aussie dollar, right? Maybe if this here can actually continue a little bit more to give you that momentum move and then starts to do some sort of pullback, then that would be a decent consideration. Okay, but you can definitely add this into your watch list, right? I think um, maybe tomorrow or the day after may present something that we can look into for Aussie dollar. Okay. Good. No questions? Okay, if there's no questions, I think generally that's about it for today's session. I'll see how this, few positions that I'll talk about develop moving forward from here. Okay, so all the best for the week, and hopefully you gain something from the session itself, and then we'll talk to you next session, right? We'll see you guys in the next session again. Okay, so see you guys.